Hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report for January 27th, 2024. Remember folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, are we setting up for a sell signal on our tech and semiconductor stocks? Well, let's take a closer look. And this is the S&P 500. And what is alerting us to a fact? Well, first of all, number one, we have a buy signal down here. So that's very, very good. And these green vertical lines represent the volume when the market closes up for the day. So we have nice green vertical lines, and that's good. But up here, we see the market reaching a higher high, and up here we see this indicator reaching a lower high. Now I'm recording this in the middle of Friday, so the markets may close up today, it may close down, but we'll see that maybe this is starting to set up, because in here you see this lower high in here, and you see this higher high in the market itself. Again, this is the S&P 500, so you see this going up, you see this coming down, and then we had about 4 or 5 days of downward movement in the market. It fell below this 20-day moving average, and then it went back up again, came back down, and that's when we got the buy signal down here, and we got a buy signal here. So now are we getting a larger sell signal in here? Is it setting up? We don't have that signal yet, but maybe. And a lot of market participants want to see this market come back down and test this high, this previous high, because don't forget, this previous high goes back 2 years, which is not shown on this chart. So when it breaks through a high like that, usually it comes back down to test that area right in there. And if it takes a couple of days to come down there, this average will move up, and it might test this 20-day moving average as well as the previous high. So that's what we're looking at in the general market. Now let's look at the technology ETF. And folks, we have this overbought high in here. And maybe if the market comes down, which it is as I'm recording this, and then goes back up on a Monday and then comes back down, it might form a top in there. And of course, here's that 20-day moving average, and here's that high, the previous high over here. It may come down to test. Problem is we have this little turning of this indicator here, and if you look at the market making higher highs all the way through here, then coming down, and you see this indicator making a lower high. So if this turns down and crosses over the red line, we will have a divergence, a bearish divergence, and we'll have a slight sell signal in here. Do we expect a lot of selling going on? No, we don't, because the Federal Reserve still might loosen up, and next week we have the Fed meeting, so we just might see a lot of nothing between now and then. And of course, it's an election year, so we expect a good market for the year. So we don't expect a big correction, but it looks like it's getting ready to do so. And when we look at the semiconductor, we see a double top in here. And that's not too good, folks. We don't like to see that. And all the way down here, if this turns down, and it looks like it is, then we have a divergence. We have a bearish divergence. And we already have the semiconductor at this 20-day moving average. And you can see the 20-day moving average is generally pointing down. So we have to be very, very careful in here. And when we look at the QQQs, and this is the NASDAQ 100, we're seeing the same type of thing here. We want to see the market go up and then come down, and we will get a sell signal. But down in here, it looks like it's turning over a little bit, doesn't it? And of course, we have this 20-day moving average in here, and we expect the market to come down at least to here, which is not a very big move, but will it go down further? So that's what we're looking at. We're looking at a little weakness in this market. But again, the market is waiting for the Federal Reserve to meet next week. And folks, we'll see what they say or what they indicate. and that will be the telltale story, at least for the following week. But right now we're in the middle of earnings season, and today some earnings, and yesterday some earnings came out that weren't that good. I'm talking about Visa, I'm talking about Intel, and I'm talking about Tesla. So we have some stocks in there that are feeling the pinch right now. And when we look at the top stocks, and folks, the S&P is up 2.7% for the year as of midday Friday. So when we look at our growth portfolio, we see it up 5.8%. Now, this growth portfolio consists of 30 stocks. Many of the stocks are in the S&P 500. In fact, most of them are, but it's a combination of stocks that have high clean surplus return on equity. Now, our technology is leading the group, but we have combined the technology, the semiconductor, and the QQQs into one portfolio, the top stocks, and that's up 6.8%. So we like to handle two portfolios, and one is the growth portfolio, which is made up of a host of different type of stocks. Mostly they're all large cap and mostly in the S&P 500. So if you compare it to the S&P 500, which we do, we're doubling the S&P 500, which is very nice. And then when we look at our triple ETF, this is our own portfolio made up of stocks from these three indices. We see we're up 6.8%. And just looking at a few other ETFs that did pretty good last year, home builders are doing nothing, healthcare is doing nothing. So now this is the index, and these are our top stocks. So when we average them all, we see that our top stocks are more than doubling the averages of these ETFs. So that's a very, very nice indication. So even though we're only less than a month into the year, we are doubling the indices no matter how you look at it. Now, if you're hedged, and I'm talking about being hedged all the time, we can see that the hedges, when you add them all together, now we're not talking about included in this average of being hedged are the home builders and the healthcare, which we're not in. But if you take these hedges here, then we're all up more than the S&P 500 while being hedged. So that's very, very nice. So if we look at the growth portfolio, if we look at our triple ETF being hedged up more than the S&P 500, being totally hedged, that's a very, very good sign there, folks, that the hedges work very, very nicely. And folks, we had a pretty good week, except Friday's a little weak and the market is hesitant going into the Fed meeting next Tuesday and Wednesday. So folks, you go out, forget about the market. If you're in the South, go walking on the beach. If you're in the North, go walking on the snow. Walk around a golf course someplace, because probably not too many people are playing golf in the snow. Take it easy. Be with your family. Be with your loved ones. Have a great Sunday dinner. Have a great weekend. Stay safe. And folks, we'll see you back here next time.